So as you guys know, Tesla stock has been absolutely on fire lately with their share price almost doubling in just a matter of months. And as a result, I've been getting a lot of questions in the comment section asking me if I think that it is too late to invest in Tesla stock at today's prices. Now, you guys know that I don't give buy or sell recommendations. I have no idea who you guys are. I'm not your financial advisor and I have no idea what your investing strategies are or any of those kinds of things. And I'm also not a fortune teller. Anything can really happen in the stock market. But what I do offer in my videos is my personal opinion as well as what I'm personally doing myself with my stocks. And in this case, I happen to be a Tesla shareholder and a long-term investor and long-term believer in the stock. So I thought it would be fun to, in today's video, to take a much closer look at the valuation to see if it is kind of undervalued or fairly valued or possibly even overvalued at today's prices. And then also take a quick look at their growth catalyst for the future to see whether Tesla's share price is justified and whether I think they can actually execute on those growth catalysts. And then we'll just kind of finish up the video with my overall conclusion. And I'll let you know what I'm personally doing myself with my position in Tesla. Again, in relation to today's prices to kind of answer that question that I keep getting. So I hope you guys enjoy this. Should be a fun one. Make sure you hit the like button if you do, and let's go ahead and get started. Hey, what's up guys? Welcome back to my world of stocks. All right, let's go ahead and jump right into this, and let's start by taking a look at their stock, and let's also do a deep dive on their valuation to see just how expensive this stock is right now. Well, as I mentioned before, Tesla stock has clearly been on fire in recent months as they are already up by close to 50% over just the past 3 months alone, and since trading for well under $200 a share just a little further back than that, the stock has really taken off like a rocket, nearly doubling in share price. Again, this is literally within months, not even a full year. Now, I personally did buy pretty heavily when it sank under 200, but as I always tell you guys, I'm far from perfect and I really suck at timing stocks over the short term, so I usually just buy all the way down, and the result of that is that I'm only up by around 60% at this time, despite the stock nearly doubling. But considering that I've only owned this stock for less than a year, I'm obviously still very happy with my position. Now, you could argue that even after this most recent rally, the stock has still not broken north of the record highs that we saw all the way back in 2017, as they're only up by about 50% in the past 5 years, which, don't get me wrong, is still very solid performance, but because short sellers really attacked the stock heavily in early 2019, the most recent rally was still not enough to reach a new record high. And so from that standpoint, you might think, well, Tesla should be able to make new records given all the positives that we've been seeing lately, and don't worry, we will certainly mention a few of them a little later in this video. But the reality is that even though we're not at a record high right now, the stock is still objectively expensive from a valuation standpoint. Now, Tesla has always struggled to be consistently profitable, so we've often looked at their price to sales ratio in an attempt to make any sense out of their valuation. And again, only months ago, the stock was trading for a PS ratio of only about 1.5 because of how low it dropped. And at that time, I was arguing that the risk reward ratio looked extremely worth it to me, even though the media and a lot of people in the comment sections of my videos kept calling it a falling knife that you should run away from. Fast forward to today's prices though, and we know that the PS ratio has ballooned all the way back up to about 2.4. To give you some context behind all of this, the majority of the sector trades well below a PS ratio of 2 and even 1, while Tesla sits all the way up here at 2.4. And if we look at the industry comprised of over 1,000 vehicles and parts companies, Tesla trades higher than 86% of them with a PS ratio of 2.4 versus the median at only 0.5. And when looking at more direct competition, granted, it's not an easy comparison to make since Tesla is the only one of these companies that is exclusively building EVs rather than ICE vehicles, but all of these competitors actually trade insanely cheaper while also having smaller market caps as well, like Ford and GM, for example, at only a PS ratio of around 0.2 or 0.3. By the way, a PS ratio of around 1 or less is generally considered a good value, but it's obviously not the only thing that you should look at. And I only really care about the PS ratio when the company is not profitable, but it just so happens that Tesla is expected to be profitable next year, and therefore Yahoo Finance does give them a forward PE ratio, a price to earnings ratio of around 60, which is obviously very high. Now, on one hand, it's good because it means that Tesla is expected to be profitable over the next year, but on the other hand, it's still insanely high compared to other players like Ford and GM, who carry forward PE ratios of only less than 7 or 6 respectively, while also paying out very high dividends, which is something that Tesla obviously cannot afford to do at this time. In fact, GM pays out a dividend of over 4%, while Ford pays out a dividend yielding close to 7%, which is pretty damn high. Thus, my overall point, is Tesla stock expensive at this moment? And my answer is yes, it is pretty expensive when looking at it from a short-term perspective. However, I don't think that that paints the entire picture, especially when looking at Tesla from more of a long-term view. See, many of these ICE manufacturers are actually really struggling to grow right now, and it doesn't look like things will change anytime soon. But meanwhile, Tesla is completely on fire at this moment, and it looks like their growth may actually get bigger in the future if they can actually execute. So let's take a look now at their performance versus some of these so-called competitors, and then we'll finish up the video with the growth catalysts that I think give Tesla a long-term advantage, followed by my overall conclusion. Okay, well, for starters, a little bit of context. When looking at the vehicle market, it's been declining globally for years, and it's expected to continue being very weak even into the future because of the weakening global economy that continues to struggle, as well as the unfortunate truth for auto manufacturers that their ICE vehicles just aren't expected to sell very well in the future and eventually get beaten out by EVs, electric vehicles. This has led to companies like GM and Ford to see declining sales, while Tesla continues to grow. And by the way, I color coded these three different companies. So Tesla is in pink, GM is in yellow, and then Ford is in like a light blue or like a baby blue. Okay, now over the past 3 years, Tesla has grown their revenues by extremely high rates, while GM and Ford have only seen a couple percentage points of growth here and there. And even though Tesla's growth has slowed down to more realistic levels after having such explosive growth the year prior, they're still expected to keep growing at a high rate well into the future, while both GM and Ford are seeing deteriorating sales. Keep in mind that if Ford and GM want to survive, they really need to make a big push into electric vehicles, which is exactly what they're doing. Ford is releasing an electric Mustang SUV and an electric F-150 truck, as well as electrifying several other models over the long term, while GM is basically doing the same thing, especially through their Chevy and Cadillac brands. Don't get me wrong, if I was invested in either company, and to be honest, I have actually considered Ford many times, especially with that dividend, but if I was invested in either company, I would absolutely want them to be investing heavily in electrification. And either way, I am a fan of what they're trying to do, and I hope that they are successful in doing so. But what you have to keep in mind is that the more that they invest in electrification, the more that they will cannibalize their ICE vehicle sales, which, by the way, are insanely more profitable than their electric vehicles. In fact, the new electric Mustang will only be profitable if you adjust for several different costs and investments. So many argue that it's not really going to be profitable at the start, but will actually hurt the sales of their more profitable ICE vehicles, which is not exactly a good trade-off. And that's really the problem that a lot of these ICE manufacturers are seeing, is that they really need the growth of EVs because they're not seeing any growth in their ICE vehicles. So they need growth from EVs, but they also need the profitability of their ICE vehicles because they haven't fully transitioned over to EVs yet. They're just not going to be sustainably growing their profits yet. So it's really debatable whether the trade-off is worth it, but in my opinion, it is ultimately worth it because that is the future of the automotive industry. So if they don't adapt or evolve, they're just going to die off. So they do have to transition to EVs, but it's going to take some time until they can fully transition over and actually sustainably grow their profits from it. Whereas right now, the growth in EVs is probably going to hurt their profits and cannibalize some of their ICE vehicle sales, which is not necessarily a good thing. In fact, if we take a look at EPS growth, which is basically their expected profit growth per share, we can see that in 2019, Tesla is expected to grow those profits by 53%, while GM will actually decline by 27%, and Ford will also decline by 5%. Now, in 2020, both GM and Ford are actually expected to grow their EPS by 33% and 6% respectively, and that's obviously a great thing, but two problems with that. Number one is that they're coming off of a horrible year before where their profits tanked heavily, so it's obviously going to be easier to grow the following year. And number two is that even despite that growth, Tesla is actually expected to soar by close to 1,000%. Now, let's not be biased here. There's a reason why Tesla is expected to soar in earnings growth, and that's because they've never really been profitable before. If we look at net income for the past 4 years, we can see that Tesla has lost billions of dollars over the years, while the other two companies have mostly been profitable by billions of dollars in comparison. So if you're Tesla and all of this time you've been investing in your company to invent, manufacture, and sell brand new products without really worrying about profitability, and thus have been losing billions of dollars over the years, and now all of your investments are finally starting to pay off and you become profitable for what is essentially the first time ever, for the full year, then you're obviously going to see amazing growth rates at the beginning. But still, this isn't something that should be taken lightly. If Tesla actually grows the way that they are expected to, it's not going to take them very long to reach similar profitability as these other ICE companies. If we go back to our EPS growth chart for a second, we can see that over the next 5 years, Tesla is expected to grow by over 100% a year on average, while the other two companies are actually expected to see declines on average over those 5 years. Okay, now I know I just threw like a ton of numbers at you, but my point is that while I do think that Tesla is too expensive at today's valuation, if they're successful over the longer term, that valuation isn't really as bad as it looks, especially when you take the growth into consideration. Now, if you're growing your EPS at over 100% a year and you have a PE ratio of around 60, in just a couple years, that PE ratio goes down all the way to like 15. So that's where that growth can really help them out in a big way and help their valuation. Now, in my opinion, a lot of this is priced into the stock already, and for Tesla to actually grow at these rates that are expected from them is not going to be an easy thing to do. Not to mention that if Tesla makes some big mistakes, or we happen to go into a recession and all of a sudden Tesla fails in actually becoming profitable or sustainably profitable, then this whole kind of bull thesis really goes away, and the stock will likely get destroyed until they can kind of turn things around. And the reason why is, again, because of that very high valuation, whereas the rest of the industry has very cheap valuations because not a lot is expected from them. So the bar for them is actually set very low, and it's kind of easy for them to meet those expectations and possibly even surprise to the upside. Whereas for Tesla, the bar is set very high and a lot is being expected from them at this moment. So Tesla needs to perform nearly perfectly to keep all of these short sellers from flooding back into the stock, which we know that they're just waiting for any little chance to do so. But call me crazy, but I actually think that Tesla will be able to meet and possibly even beat some of these very high expectations, because assuming that we don't have to deal with some big macroeconomic issue like a recession, I just see too many growth catalysts for Tesla to tap into in the future. So let's just quickly run through some of those in a rapid fire before I give my final conclusion. Okay, well, for starters, EV sales continue to see healthy growth, with global EV sales climbing every month this year according to EV volumes, again at a time when ICE sales continue to struggle. And more importantly, China alone is one of the biggest reasons to be bullish on Tesla in the future, as through the first half of this year, China accounted for more EV sales than literally every other country in the entire world combined. And despite accounting for so many sales already, they still managed to grow at a higher rate than everyone else too. This is a big deal because in Tesla's latest earnings reports, they revealed that their new Shanghai factory has already started production and is pumping out cars at a cost that is 65% cheaper than what it costs them to build vehicles here in the United States. That's very important as it will continue to improve their margins despite moving away from higher priced vehicles like the Model X and the Model S in favor of much cheaper mass market vehicles like the Model 3 and the Model Y. So not only will China be a huge source of revenue growth, but I think that it will also be a huge source of profit growth as well. But going back to that chart of EV sales, we can also see that Europe is the second largest market for EVs if you kind of group it together as a region. And there's two thoughts that I have on that. Number one is that the smaller Model 3 is perfect for Europe's narrow roads, and with how environmentally conscious Europe tends to be, there's really no reason to think that the Model 3 will not continue to sell very well in Europe. Not to mention that even the Model Y is a very small version of an SUV crossover and could therefore also sell very well to any Europeans that want to own an SUV but prefer smaller sized vehicles. And number two is that Tesla has already announced the building of a new Gigafactory out in Germany that should lower costs even further and allow them to build and sell their vehicles locally in the region, notably the Model 3 and the Model Y. Speaking of which, the Model Y is clearly another reason to be bullish on Tesla, as I actually expect it to sell even better than the Model 3, which, by the way, according to Clean Technica, in the last quarter, the Model 3 completely destroyed all other small and mid-sized luxury cars in America by revenue. And even if we look at non-luxury cheaper cars, Tesla still came in third, only behind the Toyota Camry and Honda Accord, but still ahead of the very popular Civic and Corolla vehicles. And these aren't even electric vehicles that we're talking about. The market share for EVs is still really tiny, yet the Model 3 is still selling incredibly well. And again, I think that the Model Y actually has the potential of outselling it because SUVs and crossovers are by far the best-selling vehicle type in the world, and especially here in the United States, which brings me to another reason, which is that the second best-selling vehicle type in the United States are pickup trucks. And while this may not be a popular opinion, although I do think that people are starting to come around to this, I actually think that the newly announced Cybertruck is going to sell very well for Tesla. Now, I won't give you all the reasons for this, as I just recently made an entire video explaining why the Cybertruck will be a very successful vehicle for Tesla, but I think that once all three of these vehicles are in the market with very affordable price tags, yet unbelievable performance and value, especially for the price, and with the very strong brand of Tesla, not to mention all of the technologies like autonomous driving and things like that, I think Tesla will have a very real shot at being the largest EV company in the world by market share well into the future when EV sales actually start to control more market share than ICE vehicles. And if that turns out to be the case, or if Tesla is at the very least one of the very top players in the market, then I think you'll be looking at a very profitable company, especially when you take into account how far ahead Tesla is on autonomous driving technology that will not only provide extremely high margin sales for them whenever customers opt in for the more expensive options. And I should know because I actually chose to add the feature for another $7,000 on the Cybertruck that I reserved, which is kind of a hard pill to swallow, to be honest. But this may also give Tesla a huge advantage in the robo-taxi market that many analysts predict will see explosive growth over the next decade. Markets and Markets Research estimates over 100% compound annual growth in robo-taxis through 2030, while UBS analysts think that the market will be worth literally trillions of dollars by that same year. That's pretty freaking crazy. Meanwhile, the ride-hailing market just in the United States alone is already worth over $75 billion. Keep in mind that Tesla only did around $20 billion in total revenue all of last year. And finally, there's still the huge freight and large truck market that the Tesla Semi will undoubtedly be a huge hit in once companies consider the savings on time and money from using the Tesla Semi, which we know several giant companies like Walmart, PepsiCo, and UPS have already made reservations for it, among a number of other companies as well. But Then there's also the energy storage markets where Tesla will look to tap into even more growth by selling their Powerwall for storing energy in people's homes and the Powerpack and Megapack for large scale use across industrial, commercial, and utility energy markets as well. In fact, Green Tech Media reports that some analysts are projecting the energy storage market to grow by over 1,000% from 2018 to 2024, with over $70 billion being spent. So I just really see too many growth opportunities for Tesla to really fail. In my opinion, they would have to really drop the ball and make some pretty big mistakes to not be able to take advantage of all of these different growth catalysts that they have over the long term. But that's really the story here, is the long-term picture versus the short-term valuation where the stock is soaring. Now, as someone who doesn't like to buy stocks when they're going up, I actually prefer to buy stocks when they're going down. Right here does not look like a good time for me to be picking up this stock because of the current valuation and because it just continues to climb. But if I had to say whether this is a buy or a hold or a sell at this time, if I was forced to say that, I would say that it is a hold. For me personally, this is a stock that I'm holding, but I'm not opposed to adding to it if we get some decent sized dips, which can always happen with Tesla. Tesla is just one of those hype stocks. It gets hyped up and it also gets hyped down. And whenever they make any kind of little mistake, short sellers love to flood into it and the market overreacts. And to be fair, the market overreacts to the upside too. Whenever something good happens, the stock usually really soars by a huge amount in a short amount of time. And the same thing happens to the downside. So Tesla is just one of those stocks that I really believe in long term, but it's not a stock that I like to buy when it's going up. It is definitely a stock that I love to buy when it's going down. And keep in mind that, macroeconomic issues could always happen at any moment, and the stock market is currently trading near record highs. So in my opinion, we are due for a healthy little pullback in the market as well, and that would kind of drag Tesla down a little bit also, although there has definitely been times where the market was pretty struggling pretty bad and Tesla would actually go up. So sometimes Tesla has like an inverse relationship to the market, but I think that if we had a healthy pullback, I do think Tesla would come down a little. So those would be the buying opportunities that I would look for the long term. And especially if I wasn't already in the stock, I would still look for those little dips to really be buying into the stock. But currently, I already have the position kind of built out that I want to have at this moment, because it's already like 9%. It's approaching like 9% of my portfolio, which is very high for a stock like Tesla, who hasn't really been sustainably profitable yet, like on a yearly basis. So for me, I'll just continue to hold. I'll see how the business performs with some of these growth catalysts, if they can kind of execute a little, and if they perform better and better, I'll be adding on little kind of dips. Sorry if you hear the phone ringing, it's kind of ringing in the background. But anyway, those are my thoughts on Tesla stock at today's valuations. Let me know if you agree with me or disagree with me. I would love to hear your thoughts down in the comment section, and I'll try to respond to as many comments as I can. But thanks again for watching. It really means a lot to me. And please hit the like button if you enjoyed it, and I'll catch you guys in the next one. Take care. Bye-bye.